Good morning, all. Welcome to the trade setup right here on BloombergQuint Live. It's Monday morning. It's a truncated week. We have a 4-day week in India on account of the Dussehra holiday. But it promises to be action-packed simply because it's the start of the earnings season in all earnestness. We have had TCS already. Now we'll have a bunch of others coming through. But first, the world markets. And the US markets ended mildly lower in Friday's session. So we'll have to contend with a slightly soft start on the equity side. And frankly, if you just look at it, even on the currency front, it is largely dollar bullishness. There seems to be that distinct move. And this chart on the Bloomberg terminal shows how the net speculative bullish bets on the US dollar index have hit 2-year highs. Now, typically, if the dollar index were to inch up higher, that usually brings about a bit of a pullback in risk assets worldwide. Indian equities and EM equities would be no different, even though Indian equities are a lot more resilient than the rest of the EM pack. In fact, the entire EM pack, compared to the rest of the entire EM pack, Indian equities have looked a lot more resilient. But be watchful of this. That's the limited point that I think we're trying to make here. 2-year highs, the net speculative bullish bets on the US dollar index is quite something. Now, Asia had mixed cues. ASX was okay early morning. Nikkei had a bit of a soft start. So you probably have mixed bets at best, with some indices doing a lot better. But largely, actually, as I see it right now, the move doesn't seem to be all that bearish, which is maybe from a bull's perspective, not a bad sign. The SGX Nifty should come up on your screen next. And we've had enough and more instances of how last week there were expectations that the markets would crack and crack significantly, and they haven't. Wednesday was a bit of a scare, but since then we've picked up well. So you never know that this might also be a bit of a false start. On it's not even an alarm really, it's a flattish start anticipated. Let's wait and watch if this is how we start off, if technology weighs in, or do we kind of shrug off those initial lethargic moves and then inch higher during the course of the day. Now, just a quick synopsis of what happened in Friday's session. The MOV function on the Bloomberg terminal will come up on your screen first, and then we move on to the trade setup for the day. And in Friday's session, like I said, aside of the Wednesday scare, we didn't have any large scare, so to say, in the rest of the week, especially Thursday, Friday. Friday too, the market breadth seemed okay. A bunch of stocks went up like there is no tomorrow, including companies like Nazara. And you can keep on looking at the price to sales, price to book, price to earnings of a Nazara, of a Clean Science, of a IRCTC, and they'll keep on defying. I'm not suggesting one way or the other that these are good stocks to buy at the current levels. If anything, as per historical valuation standards, I don't think anybody will be able to buy them. But, well, there is certainly buying being seen there, as you can see. I mean, Dixon went up another 8%, quite a bit, quite a strong move. And we have had stocks like IRCTC and some of the others do so well. It's a it's a really remarkable move. So what's the trade setup? I don't see any signs of a very strong corrective move in the offing. No quant indicators, no chart indicators, not even Dr. C. Narayan's column, which spoke of some corrective moves last week, is speaking of that. You have to be mindful of the fact that stocks from the real estate space, textiles and sugar are actually now entering a period of heavy news flow. You will see launches after launches because of the festive season from the real estate companies. And if indeed people go out and buy, then you will keep on seeing these sporadic news flashes that they sold X number of flats on day one of opening, etc. So very heavy news flow period for real estate, fairly heavy news flow period for textiles, considering all that's happening around the world and the Indian exports looking very, very robust. This weekend, the WhatsApp groups and the social media handles of a bunch of people were awash with bullish bets on textiles and sugar, simply because of the crushing season starting and all the news flow which could impact the cost, which is the raw material pricing, is already out of the way. So now if incremental export related news, ethanol news, as Minister Nitin Gadkari said in the India Today conclave and some of the others, we'll keep on seeing very heavy news flow in sugar as well. And from the column of Dr. C.K. Narayan this time around, instead of looking at the index, I've looked at the PSU bank chart that he seems to be suggesting will take center stage. And if you just read this piece on the BloombergQuint website, Or look at this chart that is there, wherein he speaks about how you might actually see a bunch of these PSU banking stocks take center stage. And in fact, if the private banks come along with, then you might actually have the Nifty Bank do really well and pull the index higher. So do watch out for that one. Um, and just before we get to the key, what to watch out for today, I think there's a lot of fear around what will happen to the coal shortage and therefore the power plants and electricity supply in cities like Mumbai, Delhi, etc. I myself was very scared of it, very skeptical of it. I made a brief mention of it in my newsletter as well, talking points this week. But I take heart from what the ministries told us. They've said that any fear of coal stocks depleting at the power plant end is erroneous. The domestic coal supplies have supported power generation in a major way despite heavy monsoons, and it seemingly will continue to do so. So while Arvind Kejriwal said that Delhi might enter a blackout period very shortly because of lower coal supplies, the coal ministry is not worried about this at all. And it's a big relief, viewers, because frankly, if you have these shortages, then the only way you can wriggle out of supply side issues, which are almost malignant in nature, is by virtue of higher rates, maybe slowing down the economy on purpose. And you don't want that at a point of time when the markets are doing what they're doing and at the levels at which they are. Any such news flow might actually impact the markets quite adversely. So this was a bit of a reassurance from the coal ministry. Let's see how it shapes up. Very quickly, what to watch out for today in terms of listing at the Birla Sun Life AMC, in terms of earnings, five or six very interesting companies. Delta Corp, this and the commentary on the reopening theme will be very keenly watched out for. Remember, the results come out today. We'll speak to the management tomorrow, so you might want to watch in for that. HFCL, with all that Reliance Industries is doing on that front, very important. Ramkrishna Forgings, I think MK came out with a note over the weekend saying that their target price is some 1500, 2 days ahead of the numbers. The currently the company is at 1150 or thereabouts. So very interesting to watch out for. And the metal companies, simply because while the best or the prime period of margins may be behind them, I think YOY comparisons, because of just the higher realizations, should see Tata Metallics and tin plate home. So very interesting. Also Saregama, because of the valuations that it trades at. So lots of interesting mid-size, small-size names to watch out for in terms of earnings. In terms of stocks to monitor today, um, excuse me, TCS, and all of you would have digested the earnings, but the numbers are here: 3.2% uptick in revenues, in crore terms, constant currency, net profit up 6.8%. So the numbers are known now. I think the numbers were a bit of a miss compared to expectations. The JPM note, somewhat out of the 5 or 6 notes that I read, I thought the JP Morgan note was the one that summarized this very close, very well. So I'm bringing that to you. Rating overweight, target price 4200, nothing dramatic on the upside. They're saying that the soft quarter with misses on revenues and margins will probably wane, and the headline deal wins have begun to soften, which is something that I think all of us should watch out for, not just for TCS, but for the mid-sized companies as well. We'll be talking to Mindtree this week, so that is something that we will bring to you. They believe that the misses on revenue and margins are likely to weigh in on the stock in the near term. Now, viewers, the point is there are some who are still very confident of IT and believe that the stocks will do well. So the target prices on TCS are northwards of 46, 4700. Investec is on the other side. Their target price I saw was about 2950. So it's mixed bag across the world, across the brokerage universe, I'm saying. But I thought the JPM note was the most realistic. Do watch out. There could be some pressure on TCS in the session today and thereby on the larger IT pack. Sterling Wilson Solar. Reliance New Energy Solar will acquire 40% stake in Sterling and Wilson Solar. The share buy-in of Sterling Wilson Solar via preferential allotment of 2.93 crore equity shares at 375 rupees per share. And Reliance New Energy will also buy 1.84 crore equity shares from Shapoorji Pallonji and Company at 375. So the number to note is 375. That's where the deal is done. So that's the base that has been formed. Obviously, the stock of Sterling Wilson Solar is higher than 375. It's northwards of 400. But Reliance coming into us, you could argue stressed asset because they were not able to repay debt, so on and so forth, so on. Is that a positive? Yes. Keep in mind, Reliance acquisitions don't necessarily run from day one in terms of stock prices. They take a bit of a while. So will Sterling Wilson Solar languish at the current levels for some time before it starts making a move? Or will it start moving immediately? Time will tell. Remember, just dial. Still 1,000. Reliance itself is in focus. They're a bit of a shopping spree. 7-Eleven started. They are acquiring Sterling Wilson Solar. They also acquired REC Solar Holdings, a leading solar cells, panels, and polysilicon manufacturing company for EV of 771. It prompted Jefferies to come out and say that they are raising the target prices of Reliance higher. Let's see if Bank Nifty, which I told in the trade setup, as well as Reliance, were to have a positive undertone to themselves, then we are in a good space for the markets, even if technology were to flounder a bit. Keep that in mind. Bandhan Bank update I thought was a bit iffy for a stock that has run well in the last two sessions. Collection efficiency as well as loan growth both disappointed. 90% versus 80% in June, but 96% collection efficiency in March, and now they are still at only 90%. Total loans at about 81,000 crores, deposits up 6% quarter on quarter. The CASA ratio improved, and that was actually a good sign. I thought broadly, the collection efficiency as well as the loan growth wasn't the most promising. And for a stock which has gained from how much 310 all the way to 345 in 2 3 days because of those brokerage notes, maybe a bit more could have been anticipated. Let's wait and watch if it reacts negatively. Tata Motors, I'm unsure whether it will react negatively, because some numbers are good, some numbers are bad. The JLR update that has come in, the total JLR retail volumes down 26% QOQ, 18% YOY. Not great. Retails were lower year on year in most regions. NA, China, Europe, UK, rest of the world was okay, but all the key regions, retails were lower. The global retail orders, though, however, are at record levels in excess of 125,000. If they can't deliver, though, because of the chip shortage, that's an issue, right? And wholesales, excluding the China JV, were down 13% as well, but in line with the guidance given in July. The point is, can the semiconductor shortage hurt them? The companies come out and said that they expect the semiconductor shortages to gradually ease over about the next 12 months from here, but that's a very long time frame. The good part is that the company may report a free cash outflow of under about $0.7 billion for the quarter, which is better than the $1 billion outflow initially anticipated. So let's wait and watch if that benefits. And last but not the least, viewers, we want to end with this big news that came out post market hours on Friday, which is Air India. And Ratan Tata's tweet sums it up entirely for everybody, right? He said, "Welcome back, Air India." And this is amazing. And this has got a number of implications, right? One big divestment done. Does it bring the other divestment candidates like Concor, BPCL, etc., in focus? It probably does. Does it bring Interglobe in focus? Because Interglobe had virtually unchallenged times in the Indian airline, in the Indian skies for a number of months now, even though it was COVID impacted. Now we have arguably a deep pocketed promoter trying to bring Air India back in shape. And if anybody can do it, the Tatas can, right? So that is one. We already know that Rakesh Junjunwala backed AXA Airlines is going to take to the skies soon. Is it the start of a competitive intensity period for Indigo, which was missing till now? And does that kind of put the how do I say, the valuation is not really under question, but does it bring about competition and therefore a question mark? Not a question mark, but some murmurs around whether Indigo should trade at these levels or slightly lower. I think all of that is in focus. Even for a day's trade perspective, you might want to watch out for Interglobe. It could well be a stock in focus. So these are a few that I thought were the most important ones. I haven't spoken about Equitas, that update. Motherson Sumi made a couple of acquisitions. Brokerages are divided on what they mean for Motherson, but do watch out for those stocks as well. They could be active in trading. But start of the new week, bunch of results today, and IT weakness to contend with. Do watch out for that. Thanks so much for tuning in. Have a safe, profitable day ahead.